All right, today we have Rod Khleif. Rod is a serial entrepreneur, real estate investor, a best-selling author, philanthropist, and he also has the largest, most popular commercial real estate podcast out there, lifetime cash flow through real estate investing with over 12 million downloads. Rod, congratulations.
Thank you. 13. We just hit 13.
13 million. Wow.
13
I looked
million,
at it yesterday. It was 12.
Yeah, I know. A little dated. No, we just had our 700th episode last week, which was a real milestone as well. So I appreciate you having me on the show, Greg. Let's have some fun today.
Yeah, absolutely. As you know, you and I were talking earlier, I don't typically have, guests on my channel, but I do like to bring people on that are doing big things in the industry, helping a lot of people and are giving back. And one of the things I love about you is your story. You came here, immigrated in the United States as a kid, started from very humble means, and really built a very nice portfolio, and then watched it all evaporate in 2009. So let's dig into that and talk about how you got here, how you got started, and what happened.
Sure. Well, let me go let me go back a little ways, then, if you don't mind. So, like you said, I'm a Dutch immigrant. I was born in Holland, wooden shoes, windmills, and immigrated when I was 6 years old with my brother Albert, my mother's Vansha. Ended up in Denver, Colorado, and we really struggled initially. I'm going to tell you, I remember going to an expired food store because it was less money, of course. Drinking powdered milk with our cereal in the morning, which, trust me, sounds better than it is. Wearing clothes from the Goodwill and the Salvation Army all the way through junior high school till, my mom, until I actually lied about my age at Burger King so I could buy my own clothes when I was 14 because I got disgusted. But, my mom luckily had an incredible work ethic. So she babysat kids so we'd have enough money to eat. And she was an entrepreneur with her babysitting money. She invested in the stock market successfully in IPOs, and she also invested in real estate. Well, her first real estate acquisition was the house right across the street from us when I was 14. She bought from a family named the Jewels for about 30 grand. And then when I was 17, she told me she'd made $20,000 in her sleep, that had gone up in value that much. I'm like, what? You made 20 grand? You didn't do anything? Screw college. I'm getting into real estate. So I actually got my real estate broker's license right when I turned 18. You could do it back then with education. Now they got smart. You need a little experience before you can actually have your own office and be a broker. But I was a broker. Well, my first year in real estate, I made about $8,000. My second year, maybe $10,000. But my third year, 1980, I made over $100,000, which back then was some pretty decent change. And so what happened between year 2 and year 3? What happened was I met a guy. Actually, he was another broker that I was smart enough to realize I needed to work for. And I was dating his daughter. And he taught me about the importance of mindset and psychology, and how 80 to 90% of your success in anything is just that, your mindset and your psychology. Only 10 to 20% is the stuff we talk about on our podcast, which is the technical stuff, which we're going to get into. But, fast forward to today, I've owned a couple thousand houses. I've rented long-term. I own thousands of apartment units. And in 2006, my net worth went up $17 million while I slept. And you might say, wow. And I said, wow. And I got a head so big, I could barely fit it through a door. I thought I was a freaking real estate god. And when that happens, God or the universe, whatever you believe, will give you a nice little smackdown. Well, that was 2008. I lost everything. I lost $50 million conservatively in 2008. So, let's get into it, brother.
Yeah. So what happened? Obviously, we know the
Sure.
Great Financial Crisis. I was there. I was a real estate developer. I had a huge portfolio. You and I had two very different outcomes from that event. Mm-hmm. So what happened? Everything was going great. You had cash flow. You had equity.
No. I had equity. I didn't have a lot of cash flow. Let me explain why. So I was at a 30% loan to value. Here's what my portfolio looked like. I had 800 houses along the Gulf Coast of Florida, and I had several apartment complexes. It was the houses that pulled me down. See, these were all C-class houses, okay? And they were 2 hours north of me, 2 hours south of me, and everywhere in between, okay? So I couldn't hire another management company for this. I could have, but it's impossible to find good management companies for small assets like houses. It's very, very hard. And so I managed them. And of course, Florida has no state income tax, so property taxes are higher, which impacts cash flow, right? I had some properties in wind and flood zones, higher insurance, which impacts cash flow. But what really killed the cash flow was if I sent a maintenance guy to one of my apartment complexes, everything's there is the same. The plumbing parts, the HVAC parts, appliance parts, locks, windows, so they could stockpile parts and they're in and out in an hour, But if they had to go an hour and a half one way, to one of my houses, they have to go see what's wrong. Then they have to go find a Home Depot or a Lowe's where we have an account. And I don't know about you, Greg, but when Rod tries to fix something, he ends up going to Home Depot more than once. And very often that's the case with a maintenance guy as well, once they get into something. And so what took an hour at one of my apartment complexes took all day at one of my C-class houses. Now, if you don't know, if you're listening, of course, there's A, B, C, and D class. D's the hood. Stay out of it. Trust me. Ask me how I know. But C class, they're older properties. They're a tougher demographic. There's just a lot more maintenance, and so that maintenance really killed cash flow. But then, what really the final straw, the coup de grace, as it were, was, I didn't pay attention to tenant demographics back then. If they had a decent job or decent credit, I took a deposit and I let them rent. Well, I just discovered that a lot of them were contractors that lived in my houses, plumbers, electricians, drywallers, painters, roofers, and all that fell off a cliff in 2008 and 9. So I didn't have work. So it was like the perfect storm. And then what's really crazy, Greg, is by the end of 2009, my portfolio was actually upside down. It had dropped more than 70% because I was at a 30% loan to value, like I mentioned. And as and that was it. I was done. So anyway,
I remember. So I was a builder then, and I remember it, falling off a cliff, and I had to shut down my building company. And I was fortunate because the properties I had were short-term rentals, vacation market rentals. So I had great cash flow coming in off those. I had some commercial properties. I had some development deals. And I had a bunch of cash, when 2009 happened. So I exited that and just shifted my business model, lost all my equity. All my property values went down overnight. One day I had, I don't know, 30, 40, whatever it was, million in equity. The next day it was gone, literally, just like you. The difference though was, with those single families and people not being able to pay their rent and values down, you can't sell them, you can't give them away.
I tried to sell them. I tried to sell the whole portfolio at, about 35 cents on the dollar. I literally give it away. Couldn't do it.
Yeah. And that was a very different situation in time than we're facing in the real estate market now. And, we are seeing a correction. We're seeing some things start to happen again. And I know, you have a lot of people in the multifamily space, you're doing some deals. So what are you seeing out there right now? And more importantly, what do people need to do now as we go into this correction before, something potentially could happen like what happened back in 2009?
I'm telling everybody right now, opportunity is coming because I believe it is. Okay. I was hiding under a rock the last time this happened and, licking my wounds. I got crushed by the wave. I'm surfing that damn wave this time, Greg. Okay. And so I'm in a lot of cash. I have access to a lot of cash and, I'm trying to pre-frame my investors. Hey, when it gets really ugly, when the news is saying how horrible real estate is, please don't buy into it. Okay. Just like they did in 08 and 9. Oh my God, it's going to be terrible for 10 years. Hell, multifamily rents exceeded 2006 levels within 3 years of the crash. It was incredibly resilient. And so, and that was a much bigger crash than we're expecting this time. But I'm going to tell you, I really believe opportunity is coming. And I've got a boot camp coming up the end of July, live. It's the only one I do all year. And I'm telling people, get your butt there if you have any interest in this in business, because, if you're trying to learn this business, especially multifamily, single family, no problem. But if you're trying to learn multifamily, you need to get up to speed like right now, because you need to build relationships. It's a team sport. You need to align with a team. You need to understand how to underwrite deals and all that, which, we do at this 3-day boot camp. And, let me just plug it if you don't mind. It's not a sales pitch. It's 3 days of training. And I'll tell you how you can come for $197. So it's kind of a no-brainer for 3 days of training in Denver. But anyway, that's what I'm telling people. Get up to speed, whether it's with me or not. Get up to speed right now, because again, once you're in the thick of it, it's going to be too late. And I don't know how long it's going to last. And so, if you're going to capitalize on any of these opportunities, regardless of what size multifamily you're going after, you're going to have to be up to speed and ready to grow and have access to money and all these things that I'm going to teach you how to do. So, that's where I'm at with this, Greg, is I look at it as an opportunity. Yeah, it's a little unsettling. I got to tell you, I go like hour by hour. I get a little nervous and uncomfortable. And then I'm like, okay, it's coming, get excited, but just because of, what we went through, it was very emotionally painful at the time. But,
and good experience, and there's a lot of people in the space now that got into real estate over the last, 2, 3, 5 years, whatever, and have had the benefit of the big run up that we've seen in values and rents due to interest rates, cap rate compressing, in relation to interest rates, things like that. We had the
But
same
they
kind of
haven't
thing
been through a crash,
yeah,
and
right.
and I don't, you could fog a mirror and make money in the business for the last few years. Okay.
And that was the
That's,
same in the run
yeah.
up to 0809. It was the
Yep.
same thing. Like,
Yep.
you and I, how many times did you hear everything you touch turns to gold? And it was
Right.
like, wait a minute, we're just in the right
And we
place at the
started
right
believing
time.
our own BS there too, after a while. It's like, oh man, we're so good at this. Yeah. Yeah. And that's the thing is there are a lot of new operators out there. And I've been in best and final on deals. And when I see what they traded for to a regular syndicator, I'm like, there's going to be some unhappy investors there because there are no way they're going to get the returns they've quoted. And hopefully they won't lose, capital that they don't totally fall through the floor, because I mean, really aggressive underwriting. I've seen pro formas come across my desk where they're literally saying the rents are going to double in year one. I'm like, really? Okay. All right. So
Well, but to their credit, it did happen over the last couple of years in some
yeah.
markets. So it's kind of,
Yeah.
but what I
Well,
tell
they
people
did,
is,
but even then, you literally have to turn over the entire rental base in a large asset, to accomplish that in year one. Yeah, I
right.
believe you could do it by year two, but year one is a real stretch, in my opinion, to take in double rents, because you're going to have a lot of turnover. But that's just my 2 cents on that. I just found that to be incredibly aggressive. Yes, rents
Well, and,
did double, but can you accomplish that on a larger asset in 12 months? That's a bit more of a challenge.
It is, and we're reaching critical mass. Rents can't go up exponentially forever. You're going to reach
No.
a tipping point. We're already reaching it. People are moving, people are pushing back. And if you do get a recession, like what happened in 0809, and people start losing their jobs and they can't pay, that's what happens.
And that's coming.
Inflation.
That's coming. We're going to have layoffs. I actually have to have a couple of layoffs in my thought leadership business, because people don't think about it's stupid, because now's the best time to learn a business, but people don't. They get caught up in fear, and they just hide in the sand. And so my business is slowing down, because like you, I coach and I train, I do these boot camps, and I'm here. I'm really proud of something. I've got, I've been teaching a little over, actually just under 5 years, and my students own somewhere in the 70,000 unit range in 5 years. I mean, I'm super proud of that.
And that's one of the reasons I wanted to have you on. I knew you had this boot camp coming up, and I've got several people that have gone through your program that I coach. And a lot of the guys I have started at 100 million in assets, and I take them to $1 billion. That kind of thing.
Wow.
In multifamily space. Yeah, I've got several guys that have 10x'd in the last couple of years. I've worked with them, and what I'm telling people is that, like you said, the opportunities are coming. You have to educate yourself, whether you're in residential, commercial, multifamily, you want to be a developer, whatever it is. With the market resetting like it is. There's going to be, opportunities to take advantage of existing assets that are restructuring, that, are in receivership, things like that. There's going to be just all kinds of different.
Oh, there's been a lot of bridge debt, man. And I mean, to tell you, that is some onerous debt. Not only is it adjustable rate, but if you don't meet your business model, in some cases, they can throw technical default on you, and a whole lot of other things. And so, it's very, and that was almost all there was the last really 12 months. And there was a lot of it even before then. And I just think a lot of that's going to come to head, but yeah.
Yeah, I'm hearing about, deals falling out, resetting at the closing table, deals retrading. So
that call I took before we started recording was a broker. I'm retrading a deal. I had my multifamily boardroom mastermind last week, Greg, and there was probably about 5 billion in assets represented by the guys that were there. The whole membership roster has about, 14 billion in assets. We meet 3 times a year, and it was perfect timing with everything that's going on to talk about what's happening. And one of the attorneys that's there said that almost all deals, well, I mean, I wouldn't say all, but most deals are retrading right now, because this is a valid reason to need to retrade. Debt has just gone crazy. So yeah.
Well, and it takes funding and, rates. I mean, that's what drives the deal. And all of that is changing in real time daily, just like we saw in the pandemic when, reserve requirements, liquidity requirements, all those types of things, balance sheet requirements, all that changed as well.
Right. Yeah. And we're seeing some of those reserve requirements now, like a year's interest in reserve. We're seeing that with some of the bridge lenders. And so it's going to be interesting to see how it all shakes out. And we've got money hard on this deal I was just talking about. It's a small deal, but we may back out of it. We may have to. And so, hate it, but it
in
doesn't
times
make
like
sense.
this, a lot of times you do that and then it'll come back to you, a year, 6 months, a year later. I
you're
bought
right.
deals 3 or 4 years down the road for half what I offered them, 2 or 3 years before after '09.
Right.
But let's talk about this, because there are a lot of people watching this that, with the markets, what they've done with the real estate market correcting, whether it's stock market, cryptos, whatever, they've lost a lot of money. A lot of people, their entire life savings in the stock market and cryptos recently with these corrections. How did you recover from that hit that you took in '08, '09 and pick yourself up and keep going?
Yeah, no,
and
good
get to
question.
where you are now.
Yeah, good question. I'm going to tell you, and if you're listening or watching, you may need to innovate. You may need to pivot. Okay, I'm gonna work my way backwards. Actually, and when COVID hit, I had 800 people scheduled to be at a boot camp in Orlando, and I was freaking out. We had a few hundred tickets, so I'm like, "What? I can't refund this money. I could, but I don't want to refund this money." And so I had to innovate and pivot. And if you go to multifamilyvirtualbootcamp.com, you'll see Rod's happy ass right there recording his video on his cell phone. It's still there. So I went virtual like instantly. Okay, so I was taught, I spent a lot of time with Tony Robbins, and he has great technology. People think it's a cult. It's not. It's just good technology. And one of the things that I learned from him was to innovate and pivot quickly. Be proactive. Don't be defensive and reactive. And so, like I said, I was probably one of the first ones to go virtual. And I have a compound here in Florida. I built a video studio here that I use sometimes still. Now thankfully we're going live again, because the networking is such an important part of our business. As it's who you know, who you connect with and team up with, and so on and so forth. But yeah, back in '08 and '09, when I lost everything, I actually formed another company. So a lot of people don't know I've built 27 businesses. By the way, I don't call them failures when they fail. I call them seminars, because we're like, entrepreneurs are like sharks. We only die if we stop swimming, right? And so I've built 27 businesses, several worth tens of millions, most spectacular flaming seminars. Okay. We fail our way to success. I got to, as an aside, let me just go to a side for a second. I got to meet the billionaire owner of Spanx, Sarah Blakely, the women's under that holds everything together for women. She started with $5,000 and she just sold the business for billions. And she told me at a mastermind that I belonged to, that her dad used to ask her and her brother almost weekly, "What have you failed at this week?" And I thought, what a great freaking question to ask your kids so they don't fear failure. But anyway, so back then I actually started a litigation support company when everything fell apart, to help people that were in foreclosure. And I built law firms in 5 states, and I supported those law firms as nobody had ever done this before. And I sold the business a few years ago. It wasn't a fun business, though, because nobody's happy when they're losing their house, but we saved thousands of people's houses. We would actually go in, litigate, stop the foreclosure, and then we would help them modify their loans. And we helped a lot of people save their homes. And it was a complete travesty what happened to people with those home loans. That so much fraud, high level in the bank level fraud that was going on back then. There was a movie about it. I forgot the name of the movie.
Big Short.
Big Short. Yeah. And it was absolutely accurate. I mean, I saw fraud from big banks, and I can't name them because they'll probably libel me, but I mean, I saw them with my own eyes, banks that are still around, big ones. So, it was good work, but again, it wasn't fun.
Let's talk about this. So you pivoted, you built the company. When did you buy your first real estate deal after everything went down? When did you jump back into real estate?
Yeah, it was a 101 unit asset in Dayton, Ohio. Okay. It was Beaver Creek, a suburb of Dayton. Now that's a funny story that you should ask that one. A few months after we closed, it got hit by a tornado, and all 101 units, all 101 families had to move out. And it was funny. I flew up there the next day, and I'm driving down the street and I'm like, there's no freaking damage. Then I came to our apartment complex, destroyed. And but there's a silver lining, of course. We got $650 rent bumps. Do the math on that. It's like a $12 million increase in value. So it was, but that was our first one. Yeah, that was our first syndication back then. And and since then there've been, almost 4,000 more. So.
Yeah, that's awesome. What a recovery, and I think a lot of people can take, encouragement and hope out of there. And the other thing is, along the way, educating yourself. I've read your book.
Thank you. Oh,
Yeah,
thank
I
you.
follow some of your stuff. I love your mindset of the seminar in terms of the
Thank
hits
you.
you take through life and things. And I love the impact you're making out there. And I
Well,
definitely
it's
encourage
kind of you to
anybody
say that.
watching,
Yeah, it's kind of
to
you to say that. And I got to tell you, that's a big piece in what's coming. Mindset's critical because, you've got to, if you're listening or watching Greg, you're a leader. And right now, more than ever, the world needs leaders. But to be a leader, you got to pay attention to your focus. Okay. Don't get me started on the freaking fake news and all the crap they throw out there. Even Fox is throwing crap out there. Stay off the news. I mean, you got to know the headlines. But bring in the good stuff. If you don't listen to my podcast, I hope you'll check it out. I do these clips every week called Own Your Power. And that's what they're about owning your power so that you stay motivated. You give me 5 minutes a week, I will juice you. I promise you. There's music. They're really well done. And if you come to my boot camp, I spend a lot of time on this because that's the reason my students are so successful. You got to take action with what you learn. You got to be able to push through fear and limiting beliefs and get uncomfortable, right? The comfort zone is a nice warm place. And you and I both know, Greg, nothing grows there. You got to go out there and actually do something. And so, like within an hour and a half of coming to the first hour of my boot camp is spent figuring out exactly what you want and why you want it. I call it goal setting on steroids. And so, yeah, it's probably in my opinion, it's the most important piece because, you can learn as you go. You've got to take that first step and just keep moving. But like I use the analogy, you can drive all the way across the country at night, only seeing, 50 feet in front of you. And you're going to make it. You could have some obstacles, but other people have done it before you. So it's doable. It's the same way with multifamily real estate or any really goals that you have. But we know, so many people in this business are analytical and they get caught up in analysis paralysis and they never take action. It's sad because I will tell you, some of my most successful students are the ones that are really analytical but you got to get them to take that first freaking step. And that's why I spend so much time on that at my boot camp, because it really is important. We do a lot of fun things. We can help you create your identity and let me mention how you can come for $197. If you text ROD to 72345 and then use the code ROD friend as one word, you can come for 197. The price is already double that now, but it'll be 700 by the time the boot comes. But you can come for 197 because your friend of Greg's here, and it comes with some awesome bonuses too. So, but anyway, just remember, text ROD to 72345 or go to rodindenver.com if you can remember that. If you're driving, rodindenver.com, and then remember the code ROD friend. If you forget, just ping me on any social channel and remind me, and I'll get you the code if you forget.
Yeah. And just for people watching, I don't get any affiliate commissions. I'm not part of any of this.
No.
I love what you do. I'm a big advocate of educating yourself. You should go to every event like this that you possibly can.
I'm going to an event next week. I mean, I'm keynoting it, but the point is I have this picture that I show of all these hundreds of lanyards hanging on my arms and around my neck. Because, I didn't go to college, but believe me, I am well educated because I'm always doing events.
I didn't go to college. I went in the Navy right out of high school, educated myself through Robert
No
Kiyosaki.
kidding.
I've read everything Tony's ever written, listened to all his stuff, and that's why I read your books.
We are a lot alike, Greg. You said that before we came on. Boy, wow, that's interesting. Wow.
Well, I mean, and the mindset. So I wanted to hit on that because, a lot of people think mindsets, like walking on fire and this and that, and the positive affirmations. Mindset's very different that I teach in a practical application. And you said two things. Sarah Blakely in her story, she took action, went out in the stores herself and demonstrated and pitched her strengths. When she started, you picked yourself up, you started a legal company, and you said, you know what, I got killed over here, but I'm going to take on this property. What kind of mindset shift do you have to make after you lost $50 million in equity?
Hey, people killed themselves. People killed themselves for losing the same proportionately in the Great Depression. And even in 08 and 09, there were people jumping out of buildings and for losing less comparatively. And, luckily I was around people, can I talk for a moment about some mindset strategies? Because one of them is peer group. Back then when I was losing everything, I was in Tony Robbins Platinum Partnership, which is like 130 grand a year all in. And I was around people that were thriving through the crash. They were killing it. And they're like, okay, you puss, get up 50 million, schmillion, just get up and go make it happen. That's who you need to be around, right? And so, if you're listening, get around people that want more out of life. Some people, because of their fear, their limiting beliefs, their fear of losing you, their fear of feeling less than if you succeed may hold you back. And sometimes it's family. So love your family, but choose your freaking peers. That's number one. Secondly, get aligned on your goals. If you whatever you focus on is going to get bigger, positive or negative, like we talked about the news. You know, if you can't come to my boot camp, if you go to rodslinks.com at the bottom, I did that goal setting workshop piece of my boot camp, and it's there. It's my link tree, rodslinks.com. And it's got music. It's got a guide you can download. Do it with your spouse. Do it with your kids. It's very, very powerful. It's about an hour and a half, super powerful. I promise you'll thank me. You know what's sad, Greg? People spend more time planning a freaking birthday party than they do designing their lives. And that's designing your life. And so yeah, got to figure out what you want, pay attention to your focus, pay attention to your peer group, and then you've just got to go take action. You know, take that first step, make a decision, take that first step. The next step will be revealed, and on and on. And when I tell you opportunities coming, you know, some people are saying it's not going to be too big of a deal, this thing. I think it's going to be bigger than they think, because you can't throw trillions of dollars into this economy and expect these interest rate bumps to have that big of an impact. I think it's going to, you know, they're saying 5 more, I think at least 5, maybe more than that, rate increases. And we just saw 75 basis points, which is insane, and 50 before. And so, you know, there's talking 50 and 75 in July, 50 or 75 in July again. I don't know if you read that, Greg. I mean, they're talking about another big one like that. You know, I don't know about you. Do you remember? Do you remember getting excited when 7% came around? Do you remember? Because I don't know. We're about the same age.
I mean, when I started in the industry, interest rates were 10%.
Oh, then I'm a little older than you. When I started, they were like 16 to 18%. Yeah. And so, you know, I remember doing backflips when 7% came around, and that's coming, guys. We're going to be at 7% in July. Okay. If it keeps going the direction, or August at the latest, keeps going the direction we're going, it's at 6 now. We're underwriting our deals at 6.25, just to try to be conservative, you know, and God knows what the exit cap is going to be. I mean, you know, we used to be able to just do 20 basis points a year, and we've got to definitely increase that. It's so, I don't know. What are you doing right now?
A lot of people aren't thinking about, you know, the Fed's just getting started. They haven't really done anything yet. They haven't rolled off the balance sheet yet. They haven't started that. They've raised rates a little bit. And, you know, a lot of people say, oh, this is different than 2008 and 9, which it is structurally. Right. What we don't know is what's lying underneath the surface that could crack, that we're not thinking about, we don't know about, because nobody knew the banks were going to start collapsing in 08, 09 like they did. The credit markets are at risk, the bond market's at risk, you know, so there's a lot of, you know, structural seismic things that could happen that could really, you know, change things quickly. And we just don't know.
No, you're absolutely right. And who knows what the catalyst will be, but it's very dangerous ground. And the fact that inflation is still going and likely will continue to go is very so freaking frustrating, because I'm in a lot of cash, and it's just like, and just watching the value of it go down is very painful.
Yeah, it's better to be in cash and, you know, watch that a little bit than to be in something else and watch it go down a lot of bit.
Agreed.
Awesome. Well, and one last thing I want to leave everybody with, because this is hugely important about, you know, what you do teach. I've heard you talk about, and it's the first pillar in the whole thing. Like, you sit down, you help people structure their goals, because the hardest thing for people to do is figure out what it is they want. Talk about that a little bit.
Well, listen, I will tell you that when you ask that question several times in a row, you get to happiness and love. I mean, that's the bottom line. But for many people, you know, we feel we have to achieve to be happy. Like we can't be happy until we've achieved. And I'll tell you a story about that real quick. But the bottom line is, well, let me just tell it right now. So, you know, I remember building this house on the beach. Okay. I worked for this thing for 20 years, $8 million house. And this is not me bragging. Please know that. Hopefully there's a real message in this. So, you know, I work for this thing, an incredible home. I mean, giant spiral staircase up through the middle of the house, big, wide waterfall from the second floor balcony into the pool. You had to walk through the waterfall to get into the pool. Pool was in magazines. It was a Gulf to Bay. I owned the beach on one side, had my boats on the backside. It was like a slice through an island. And that was unthinkable when I was 18. So when you do your goals, and you'll hear me reference this, because I use that as an example to take the lid off your brain, because if you can imagine it, you can make it happen. I mean, look at Elon Musk, $3 billion startups. Don't tell me what you can't do. There's nothing you can't do. Okay. And so, you know, but So I worked for this thing for 20 years. 2 months after I moved in, I'm floating in the pool at night and I'm looking up at this testament to my ego. That's the reality of it. I built this to prove the world I was good enough. You know, I had stuff happen to me in school when I was growing up that caused me to believe I wasn't good enough. And so I'm looking up at this thing and I got depressed. And I don't mean a little depressed. I mean, I got really depressed. I'm like, what the hell? I've just achieved success like times 10,000. I had a beautiful family sleeping inside. I had the Maserati and all the stupid crap, the 2 Mercedes and the boats and the jet skis, all the stuff. And so again, worked for it for 20 years, 2 months afterwards, I'm depressed. And there were several things going on, and it ties into what I just mentioned. One is, it's never about the goals. You need the goals to create what Napoleon Hill in his book, Think and Grow Rich, calls a burning desire. You got to want it. That's how you push through the fear and the limiting beliefs and get uncomfortable. You got to have that burning desire, which is why the goal is the most important piece. I'm doing an event next week, a conference in North Carolina, and that's all I'm doing. I'm doing my goal setting thing. I could talk technical ad nauseum, but I'm doing the goals. I'm the keynote that starts the thing. But anyway, so but again, it's never about the goals. Happiness, they say happiest days of a boat owner's life, the day they buy the boat and the day they sell the boat, right? You need them, but it's about progress and growth. Happiness comes from progress and growth. And I didn't know what I was going to do next. You know, I didn't have a vision for the future. Like the good book says, without a vision, the people perish. I didn't know what I was going to do next. So that was another piece. But the big piece was, I had been totally focused on me, show the world I'm good enough, show the world I matter. And that's the year I met Tony Robbins. And I went to one of his conferences and found out he fed families for the holidays. And so I'm like, you know, I had to be 40 to get that memo, but I'm like, you know, what a concept, do something for someone else. So I got back, I called my brother in Denver, who I was going to visit, him and my other family in Denver for Thanksgiving. I said, let's feed 5 families. And so he went to his church, found 5 families who really needed help. And we bought toys for the kids and frozen turkeys and food and had a lot of fun with it. And third family changed my life, Greg. You know, we go up to this house. There's this woman in this crappy 1-bedroom with 5 kids. She comes out, she sees all the stuff on the porch, the toys and the food. She starts crying. Kids come out, the older ones start crying. I start crying and I'm hooked. And, you know, I'm blessed to say in the last 22 years, we've fed probably somewhere upwards of 130,000 children here in Sarasota and Bradenton. We've done tens of thousands of backpacks filled with school supplies to local kids that don't have basic supplies for school. We've done tens of thousands of teddy bears, local police departments for their officers to keep in their vehicles if they encounter a child that's been traumatized. And again, this is not me bragging. There's a message here. Again, we've been taught to achieve, to be happy. Okay, like we shouldn't be happy until we've achieved. I'm going to tell you, when you give back in any fashion, you're happily achieving. Now, we do it with our podcast as well. I mean, I'm sure you get a lot of love and great feedback from your podcast like I do. But guys, you know, Tony Robbins calls it the science of achievement versus the art of fulfillment. Achievement's a science. You want to learn multifamily, get with Greg, come to my freaking boot camp. I'll give you the map, the blueprint. You just have to go do it. Okay. It's a science. There's no secret sauce here. But fulfillment is an art, because you have to find out what juices you. Maybe for me, it's kids. Maybe it's the elderly for you, or animals, or the environment, whatever it is. Give back right now. Now, if you're, you know, young and you got blood dripping from your teeth, you know, you want this success so bad and you're saying to yourself, yeah, I'll do it when I have money. No, big mistake. Do it right now. Because like I said, we've been taught to achieve to be happy, but if you give back, you're happily achieving. And I know it's a play on words, but it's an important one. So again, and you'll get the success faster. That's the bottom line. That's the way God of the universe works. You agree with me, Greg?
Oh, absolutely. Yeah. Give and you shall receive, right?
That's it.
And that's what I love about what we do as coaches, mentors, educational providers.
That's right.
We give the other people the ability to achieve so they can give back.
Yeah.
That's huge.
Yeah. Yeah. I just had some students finish a hike 2 days ago, 170 miles. They raised 180 grand. I had another student building a school in India right now. I mean, we breed that mindset in our warrior program. You know, that's my mentorship students that own the tens of thousands of doors. But yeah.
Well, I love it, Rod. I love what you're doing. I
Thank you,
appreciate you coming on, letting people know about your event coming up in Colorado. Yeah. I'll put a link in the description. I'm going to post this today. I'll put a link in the description so people can go to your website, get all your resources. And
you're posting today. Oh, wonderful.
Absolutely.
Thank you. That gives them time to book travel. I mean, Denver's United's hub, so you can fly nonstop from anywhere. And I've got a great room rate of like $110 a room, I think. So
yeah, that's awesome. I've heard a lot of really great things about your events and the education that you provide. So I really appreciate you doing this today.
Thank you.